take top 3-4 private banks in India, majority of them is still owned by foreigners. We keep on saying that microfinance is a very rural thing, but actually it's not. You will find a lot of microfinance credit being done in Bombay because there are a lot of people, sabji wala,
correct,
pan ki dukaan, those kind of things. That is where all these new segments, new companies are actually doing a great job for us. And there is a lot of growth available.
So every AMC usually has their own funda,
Yes.
right? What is your philosophy of investing or shortlisting companies? I have a very special guest with me, Mr. Anupam Tiwari, who has more than 18 years of experience in the mutual fund industry
and currently is the head of equity at Groww Mutual Fund.
So Anupam, thanks a lot for coming here and giving me your time, and obviously going to give a lot of knowledge for our entire audience. So the first question I have for you is very simple. Tell me a bit about yourself. What got you into finance and what do you do at Groww Mutual Fund?
I started my career in stock market in 1999.
Okay.
But I formally joined Reliance Mutual Fund in 2005 as an analyst. Then over a period of time, I became a fund manager, worked in Principal Mutual Fund, then Axis Mutual Fund. And now I'm heading the investment team in Groww Mutual Fund.
How was your experience in Reliance as well?
It was great. Work with great set of people. So investing is kind of combination of science and art.
Okay.
So science part you read with books.
Wow.
You get into academics and you read books of finance, investing, etc. You learn that part. But the art part is that you learn from your gurus. So that is why it's important to work with very good, intelligent people. And I was fortunate that wherever I worked with very intelligent, sharp people.
So you told me you started your journey in 1999. So that means you've seen a lot of the stock market cycles that is going on, right? And I think recently we witnessed one cycle where post-COVID we saw like this massive boom that was going on in the market. Yeah. And then because of the Russia-Ukraine war, we saw a dip. And now we're back into like a weird bull run, right? So I want to understand from your perspective, where do you think the market is going right now?
Now we are in a very fine fettle. So in a very good shape.
Yeah.
So let's segregate the two things, right? Market and the economy. Because eventually it is the economy that will drive the market.
Yeah.
Market keeps on gyrating between undervaluation and overvaluation. What we call is euphoria and fear, right? So in COVID, first phase was the fear. So when that everything is going down, world will end, India will collapse. So it just went down significantly. And then we suddenly realized that no, everything is good, opening up and is starting to do better. So that euphoria is kind of setting in. And now we have some kind of euphoria in small caps, etc. So on the economy front, we are doing quite okay. So growth is sustaining. The latest data was also quite good. In terms of the international situation, the global situation, because we are a small country in global parlance, the total global GDP is $104 trillion.
Wow.
And we are just roughly between 3 and 4, 3.5 you can say. So we are like 3.5% of total global GDP. So we get impacted by the globe too much. And especially when there is a war going on now, there is a second war going on. US inflation went up, US interest rate went up. US interest rate have a deep impact on our currency situation. So because of all that, we had a bit of problem last year in the first half. But then the resilience of our economy started to playing out. And we did well. We went through that phase really well. And now that problem is peaking out. So now even US interest rate and inflation is getting under control. So I think we are in a very good shape in terms of what is overall happening in the economy. And now if you just juxtapose that to the market part, yes, there is pockets of overvaluation. I would not say anything is cheap out there. But yeah, there are good reasonable stories which are at reasonable valuation, good growth stories that you can find. We always say that there is always some opportunities in market. Everything never becomes something that you cannot buy. Yeah. So yes, there are. But yeah, there are euphoric phase in some of the stocks.
Yeah, I think that we've seen. I think now a lot of people are just investing and buying a lot of IPOs and making multiple demat accounts just to invest in IPOs so that you get this listing gains kind of a thing. So we're seeing that right now. But very interesting thing that you mentioned, right? That US had a lot of impact on India, right? If the interest rates used to change in US, it used to impact us as well. But recently the Fed has come out and said that in the near term, we will be cutting more interest rates. Yeah. So does that actually benefit our Indian economy or Indian banks as such, or the BFSI space in India?
In a way, yes. See, US interest rates are very, very important for anyone because the dollar is the global currency, right? Yeah. And especially for a country like India, which has two problems. One is that we are perennially capital starved. So we don't have enough capital for our own growth and consumption. Two, we have a perennial current account deficit. So we are in a way dollar dependent to a larger extent. So when the US interest rate goes up, in a plain economic theory parlance, the US currency will harden, the dollar will harden, and our currency equally may depreciate. And that will cause us problem, right? So we have to increase interest rate to maintain the currency level. So when the cost of money goes up, your economic activity goes down. Right? So if US interest rate goes down, our cost of money will also go down and our economic activity may become little better.
Yeah.
And then banks benefit because they are the drivers of and they are the provider of capital to the growth of the businesses. So it has a very, very high correlation.
And is that what we're seeing now? In the last 1 year, I have seen that the BFSI space has done really well. More in the banking and small finance banking, in that space has become very hot in the last 1 year. So what has changed that the whole, not just private banks, PSU banks and the small finance banks are doing really well, but what has happened basically?
So a couple of things happened. If you look at history, post 2008 global financial crisis, the 7-8 crisis, we had a lot of accumulation of what we call as non-performing assets.
Yeah.
So basically people borrowed money and they were not able to repay because their businesses were not doing well. And up to 2015-16, it took time for banks to clean up that balance sheet. So all those NPAs were off, they were doing okay, their capital position was good. And then COVID happened. It was a very bad thing for overall economy and overall, let's say, from a loss of life perspective. But it created a lot of liquidity in the system because people were not able to spend. And because of that, banks were able to come out of, they got in a beneficial situation from that perspective. We have a saying in market that the problem of debt is solved by inflation in long term, and problem of NPAs are solved by liquidity. So that liquidity kind of drove NPA problem much lower. So in last 3 years, balance sheets have improved.
Yes.
Growth has come back for especially those banks which were heavily impacted between, let's say, 2008 to 2013 period time frame. So that was one reason. Secondly, India needs credit, right? We are a credit-starved country, or the requirement of credit is not being fulfilled currently. So there is always a demand of credit. And whenever environment is good, credit is easily available. What we call is risk on, risk off, right? Pre-COVID, if you look at from 2016 to 2019, we went through a lot of crises. So demon happened. That created a lot of liquidity problem in the system for people. And because of that, there was a risk off kind of situation for banks. There was more conservatism in the banking system. And then 2 large NBFCs collapsed and 1 bank collapsed. So because of that, there was too much of tightening. And that drove a lot of underperformance for some of the banking sector. But now things are very good. So yes, you are right. What PSUs did very well. Some of the smaller NBFCs banks did very well. Private banks have not done that well.
Yeah.
But overall, if you look at the sector valuation, it's quite attractive.
Understood.
Yeah.
Now, I think we've seen this with banks. They've done a good run up in the last 1 year. But is this over or will this continue? What does the credit cycle look like? As you said, India is a credit-starved country, and looking at the growth that is happening right now in India, and if we look at the banking sector as well, I think most of the loan book is from the housing, home loans or the housing, and then the next part is corporate loan book,
Yeah.
right? So both are currently doing well on both sides. So do you think this is a short-lived excitement, or is this something that's going to be there sustainably for a longer period of time?
No, I think it's a very long-term growth story.
Beautiful.
Because what happens is that if you look at one that we compare ourselves like, 10 year, 20 year, 30 year ago from that situation. And sometimes people say we are over leveraged, there is too much of consumer credit, etc. But you are comparing with the situation when there was no consumer credit, right?
Yeah.
Now things are becoming available and people are borrowing. Of course, there will always be pockets of trouble.
Yeah.
And they will keep on coming and going.
Yeah.
Right? This is not a business where you can have 0% NPA. There will always be NPA,
Yeah.
right? And is part of the business model. But to say that it's getting out of control, I don't think so. And the best thing about this sector is that it's a highly regulated sector.
Yeah.
So there is an RBI who's like controlling it, watching it, doing it. So recently they came out with higher capital requirement for the unsecured credit.
Yes.
Because they could see that it is very high growth phase. And as economy grows, your income grows, right?
Yeah.
So your saving grows. So one, it becomes raw material for the banking system.
Yeah.
Another thing is that when your income grows, your ability to borrow is also high.
Yeah.
You want to spend more, so
Understood.
you borrow more. So if you look at from medium to long term perspective, we are in a very, very good situation. There is a lot of growth potential both on the corporate side,
Yeah.
because we believe that now capacity utilization is reaching at a very high state.
Yeah.
And that will drive further investment, further capex. So that will drive corporate credit demand, which last 2 years has been very, 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 very weak.
Yeah.
Then the consumer credit or the individual credit, that will grow. The household credit. The household credit percentage in India is very, very low as compared to any other country. Or if you look, say, comparable GDP size, so it's quite low. So that has a scope to go up. Credit penetration will increase.
So on this thought, so we had also taken some questions from our community audience as well. So there was a question from Pratham Gupta who basically said on the topic of this, right? So he said that because in the last few years we've been seeing a lot of uptick on the credit and the debt increasing for a lot of people. So there's a lot of rumors that India is moving towards like how US was, which is a debt-driven society versus a saving-driven society, and we are obviously predominantly been a saving driven society. But is this a good thing or is this sustainable? Like the credit that people are taking now, they're taking credit cards, they're taking loans. It's become so easy that I can just go on a phone, 3 taps, 4 taps, and I get instant disbursement, which was not possible 5 years ago. So how do you see this market? As you said, there are some pockets that are great and there are some pockets which might be a question. So do you think consumer lending or the consumer's affinity to go into debt, is that a good thing, bad thing, or do you think education is required? What is your take on this?
So, every coin has two sides.
Yeah.
So there is a good part of it, there is a bad part of it. So you need to look at the evolution of India's financial system, how it happened. So roughly in 70s, we went through nationalization, right? Before that, credit or even you can say the banking services were not available for masses in India. So the primary source of credit was basically money lenders.
Oh, that was very high interest rate also.
Yeah, and it was very, very difficult for the society. So when people say that we were not taking credit, but now we are taking credit, is just that we never had that data. Now we have data because it is more formalized, right? Now you know how much consumers in India are taking credit because you can look at the balance sheet of NBFCs, etc., and you can find out that numbers. Credit was there before also, but it was not in a formalized manner. So no data was available.
Now it's mainstream.
Now it's formalized. You have data, right? Somebody is watching that data and somebody is reporting that data. So that's one part, that we never had availability of formal credit till 70s actually. And then nationalization happened. And of course, like any other thing, it first went through the urban areas.
Yeah.
And because it was mostly government driven, there were a lot of regulation rules which prevented kind of a huge penetration of credit. And that is why at some point of time, RBI decided that we need private partners, private banks and private other lenders in the system so that we can enhance the penetration of credit.
Wow.
So let's say around early 2000 or late 90s that started. There were banks like there was a Times Bank. So that was I think the first private sector bank, and then other banks were opened. They were given license, etc. Then HDFC came and ICICI came, etc., etc. So then the formalization of credit started in a big way, especially the retail credit.
Yeah.
The corporate credit was available earlier also, but the retail credit was not that formalized.
Yeah.
And it also drove a lot of consumption of more credit because people realized that they can afford to buy today, pay some interest, and have some kind of better life.
Yeah.
Or may have some kind of more luxuries. So you can buy a good TV, you can buy a good vehicle.
Yeah.
Right? I would not say necessarily it's a bad thing. It's not like you are over leveraging. At the end of the day, people want to enjoy their life in a better way, right? But at the same time, cycles happen. So you will always find people who will over leverage, or in enthusiasm or in euphoria of, or in let's say too much affinity to growth. People will make bad credit decisions, or the corporations will make bad credit decisions. Banks will make bad credit decisions. NBFCs will make bad credit decisions. So you will have NPAs. That will keep on going. But not necessarily it is correct to say that people should not take credit. It drives growth, it drives consumption, it becomes income for someone else. But yeah, it should be within control limits so that you can live with it, you can repay the loans, etc.
There's a new segment, or there's one segment in India which is the tier 2 and tier 3 Bharat
Yeah.
that they call, where credit is now getting formalized there as well. And if that grows, then that is what is pushing even the SME market, right? That is what is pushing our entire economy upwards really
Yeah.
well. So, what is your take on the loans that are going out with these small finance banks or microfinance? Also, I've seen recently coming up, and there are big players coming in this space who want to make this industry a big industry. So, what is your take on those kind of players?
No, it's very important because lot of these people, they have assets,
Yeah.
but they have small assets, right? They have a small house, they have a small factory, they have some machines. So yes, tier 2 and tier 3 towns are very, very important from a perspective of availability of credit. The penetration is low, so obviously these towns suffer, and the people over there suffer, both from a business perspective as well as from a consumption perspective.
Correct.
And they also drive a lot of growth in the system because there is a large population which is staying there, so it has to consume and it needs credit for that.
Yeah.
And there are a lot of businesses who are servicing them and who are supplying goods to them, so they also need credit. But because of reasons of, let's say, lack of capacity in the system, the credit availability was low. So let's say, for example, in a village or in a town,
Yeah.
there are only 5 branches of banks, and they have a physical constraint in terms of how many customers they can service, and then there is also problem of how much risk they want to take
Yeah.
and how they assess, because in a lot of these towns the formal jobs or formal kind of income is not available, so assessing credit is a challenge. So you need people who can do that.
Yeah.
And that is how these newer kind of companies, which are NBFCs, microfinance, etc., they are able to provide, better service to them and making more credit available to them.
Understood.
So that is a very good thing, and there is a lot of demand of credit over there.
But is the risk higher there in that region with respect to NPA, or you've seen that it's pretty much the same?
It has not played out that way. If you kind of exclude COVID period,
Yeah.
when everybody went through lockdown, so there was a lot of credit cost being
Correct.
incurred and a lot of slippages happened. But other than that, the behavior, the data shows that it has been pretty good.
Okay.
In fact, if you look at the microfinance side, which is though a very balanced and very well distributed in tier 1 town and also tier 3 town. We keep on saying that microfinance is a very rural thing, but actually it's not.
Oh, okay. I didn't
You
know
will
that.
find a lot of microfinance credit being done in Bombay also.
So small ticket loans even given in tier 1 cities.
Yeah.
Okay.
Yeah. Because there are a lot of people, sabji wala,
Correct.
pan ki dukaan, those
Correct.
kind of things. They need, so microfinance companies are actually servicing them.
Okay.
And they need credit to grow, they need credit to have more inventory, etc. So from that perspective, these companies are becoming more and more specialized. And these niche things which require a certain kind of expertise cannot be done generally by a universal lender or universal bank. So they need a specialized skill set.
Okay.
So that is where all these new segments, new companies are actually doing a great job for us.
Wow.
And there is a lot of growth available because these people have been constrained by availability of capital. Also, there are a lot of assets available with all these guys, in tier 2, tier 3. So they have house, they have land, they have
Correct.
something. So they can convert into capital.
Okay. So is that why NBFCs, mainly in tier 2, tier 3, the gold loan NBFCs have started doing well? Because the gold bank is there a lot and they usually use that as collateral?
Yeah. So that is one of the good things that is happening in India. So if you look at history, again, I will come back to that.
Yeah.
That financialization of saving started very late in India. Because there was no institution available to channelize that savings into savings of any individual to financial savings, financial products.
Correct.
So how do you save money?
Yeah.
You want to convert your money or the currency to something which is more durable and also grows. Because people have been knowing it forever that inflation kills the purchasing power of your money. So they're buying land and they're buying gold.
That was the only option at that time.
Yes.
Or FD came much later. As
That
well.
came when banks came.
Yeah.
Right. So that habit remained there.
Yeah.
So a lot of people say, why this obsession for gold in India? Because you could do only that.
Yeah.
So if you have a very big chunk of money, you can buy land. But if you don't have that big chunk of money, what do? You have to buy gold, right?
Yeah.
So when banks started coming in, you have another avenue to put your money into that. So that is how financialization increased.
Correct.
And then came mutual funds, etc., insurance companies, they penetrated and they created more avenues for financial savings. So from that perspective also it is good because you can channelize the tier 2, tier 3 savings into whole economy if you put more and more banking system over there.
Wow. So, I mean, from the way you look at it, then obviously banks are very important for any economy. And I think from India's perspective, we've just entered the era of digital banking right now. And as you said, we've started off a little late, right? But now the innovation is increasing a lot, and we're seeing settlements happening very fast. We're seeing FDs coming out really, and different instruments coming out really fast as well. But I've also seen that whenever the country is growing, right, when we are in this good part of the country's growth, that's when the banking sector also starts doing really well. So, is there a direct correlation between country's economy and banks in India?
Yeah. So what we call is finance is lifeline of economy.
Yeah.
Right? Without finance, without capital, you cannot grow.
Yeah.
Now there is capital with people, savings. What we call is with income you save more and more. But how do you channelize it to the person who require capital? So that is where the basic fundamental reason for existence of banking system comes. That it takes money from savers and then it creates capital for who can invest it, who can spend it on a productive business or something like that. So without financial system, you cannot do that. For any economic growth, that is why financial system becomes a very, very inherent and both a cause of growth and a beneficiary of growth. How it happens is that as economy grows, your income level grows at the people who are working and people who are earning more and more. And then they create savings. These savings go to banks, other financial institutions, or let's say mutual funds, etc. And then that saving is channelized into people who can consume that money and then spend more on investment, etc. And then further growth is created.
Yes.
So it creates a virtuous cycle. Right?
Okay.
And that is why whole banking and financial system is very, very important. And it is a big beneficiary of the overall economic growth. So if you look at larger countries, let's say look at China or let's look at US, eventually the growth in BFSI sector becomes, let's say, 10 to 15% higher than the GDP growth.
That's a lot.
Yeah. It's like 1.15x of what GDP is growing.
Okay.
Because it is benefiting little more out of the overall growth because it is channelizing those savings, creating new and new avenues of creating that capital.
Wow.
The second important thing that banking and financial system plays is converting assets to capital.
Yeah.
As I said, so you have land, you have gold, you have other things, you have a vehicle or you have machinery. How you monetize on that?
So all the savings are coming now out back into the formal system of credit.
Correct. So you can mortgage that thing and create capital out of it and you can further reinvest.
Wow.
So that's very important for growth and then again that drives savings and income.
Wow. So talking about growth, so I just recently read a very interesting article about mutual funds, which said that India has now topped 50 trillion rupees in terms of AUM, which is assets under management. And I also saw that the equity inflows is approximately 17,000 crores in India. But that's not a small amount. That's very big. And yes, India has been in this culture of SIP. And a few years ago, we all had this whole thing from Amphi that kept talking about SIP is good, SIP is good. But with this coming into the picture, what do you think is the outlook for mutual funds in India?
No, it's very good because Indians inherently are underinvested in equity. So let me give an example. So if you take top 3-4 private banks in India, they are like now almost 20-year-old.
Yes.
Majority of them is still owned by foreigners.
Really?
Yes, not by Indians.
Okay.
Because 20 years ago, the equity culture was not so big. And they needed a lot of capital to grow. So the only avenue for them was available to raise capital was foreigners.
So foreign institutional investors used to come and pick up stake.
So foreigners were more confident about India 20 years back and they provided capital to these banks than Indian themselves.
Wow.
So majority of these banks are still owned by foreigners.
Okay.
And I would say they would have created roughly 25 lakh crore of market cap put together.
My God.
And majority of that, approximately 55-60% is owned by foreigners.
And they're still continuing to hold?
Yeah, it has come down a bit.
Yeah.
But they are still owning a large part, majority part. More than 50% is still owned by all these top 4 private banks by foreigners. Coming back to the question
Mutual
on the
funds,
mutual
yes.
fund side, so we are highly underinvested in equities as a country,
Even now?
even now.
Okay, wow.
So in my opinion, these flows are not great.
Okay.
They are just starting up.
Okay.
Okay, we will become like 5x, 6x over a period of time of this current inflows.
Yeah.
And again, this is just like a habit. There is a generational shift happening. My father would never understand what is equity, what is mutual fund. He still doesn't do any kind of thing. His favorite thing is FD.
At that time, stock market was gambling in that era.
Correct. So, and last 20 years with lot of education, financial education, a new generation coming in, which is more attuned to financial knowledge, etc.
Yeah.
Now we are getting into that. So it will keep on growing.
Yeah.
And there is no reason for it to not to grow.
Understood.
And it would be beneficial for all of us.
Yeah.
Because if you really want to beat inflation over long term, equities are the only way.
Yeah.
It creates a lot of wealth. Of course, it is volatile. But if you give it more and more time, that volatility goes down.
Correct. That I've observed because I've seen a lot of people, like for example, if you have a kid or you want to plan for your retirement, they start an SIP today and let it compound for 20-25 years. And that actually builds significant amount of wealth. As opposed to the other school of thought where you just invest in a stock today, do it short term and then get quick returns, right? You can build good generational wealth if you start doing an SIP very early on.
When you invest and leave it, compounding works on its own.
Yeah.
Right? If you keep on churning and doing something, compounding doesn't work. You should not let the compounding stop.
Yeah.
Just let it happen. And you will see that in 10-15 years down the line, it will create humongous wealth for you.
Correct. So this is all for the short-term guys who don't have patience to keep your portfolio for a long period of time. Have patience and keep it for a long period of time. And now it's easier also, right? The reason why mutual fund penetration is increasing is because I can take my phone within 4-5 clicks with UPI, quickly just subscribe to either an NFO, which is a new fund offering, or get some units of a mutual fund. So that, do you think the digitization element of India going into such ease of payments has actually increased the inflow of mutual funds?
Yeah, I think it's a great thing that has happened to India.
Yeah.
The whole digitization thing, the whole digitization in the financial business space, starting from banking, settlement, mutual funds, insurance, etc. You have to understand it from a very structural point of view. Making credit available or making a financial services available to a broad strata of people is very costly, right?
Correct.
Because it's a service.
Correct.
So if you want to do it one-on-one, you have to open a branch, you have to have an office. That branch or office has to be viable for people to come. And then you have to go and explain everyone on a group or on a physical basis, right? Face to face, that this is good, this is how it will work, etc. People might not understand it fully. Now digital comes, right? So you can access the last mile of customer or a very small customer at a very low cost. Because it's at a mass scale, be it banking, mutual fund, insurance, anything. And then for a investor or for a saver, it creates a lot of comfort in terms of both things. One, ease of doing transaction. He can do it on his own pace. Second, understanding the product well. Because if you have a digital ecosystem, if you have social media, you can put him into a very good knowledge base.
Correct.
He can at his own pace understand what is his requirement, how to clear that confusion, etc. That is not possible in such a large population in a physical mode. So digitization has also given a lot of knowledge to people. Like people watching your blog or your channel. And they understanding it. And then they are coming and doing that transaction. So it makes a lot of things easier for them.
No, I remember 10 years ago when I opened my mutual fund account, I had to go to the private bank, sit there, sign 30 pages of documents on each page, and then my account used to get opened, and then I go subscribe. Then I came to know it was regular and not direct, and I lost a lot of money. So I think now with the education coming up and the ease of access through your mobile phone makes it much easier. Now coming to one very interesting hot topic, and I think you guys will agree to this. We've all heard of index funds. And now in the last few years, this was not something which was there for a very long time, but last few years, index funds has got a very big boost in India. Now, I know the West has been talking about index funds, and I think Warren Buffett also talked about how index funds beat most of the funds out there, right? Now, why did this sudden burst of index fund investing in India come up? Number one. And number two, we've seen retail participation coming in index funds. So why do you think this is the case?
So this is a good question on index funds, and you need to look at it from a multi-dimensional perspective.
Okay.
So the first is that financial decisions are complex. So sometimes we tend to avoid it just because of the complexity.
Yeah.
Because you cannot figure out what to do, how to make
Basically,
those
investing in stocks is directly it's a little hard.
So let's say for example, if somebody who is like thinking about mutual funds, which mutual fund, what type of mutual fund, it makes little complex for them. So index fund psychologically make it very easy, because this is what it is and everybody is kind of safe.
Yeah.
And there is one index which will keep on working on its own. So that's one part, and which is good, that it makes things easier for the investor to take a call. Then of course there is a cost element involved because they are cheaper, because there is a standard portfolio that we have to invest. The third aspect why this whole discussion started about underperformance, etc. You have to look at the context. This happened in US in last, let's say, 15-20 years, when market matured, economy became pretty large. So for a diversified fund to have opportunity to create significant alpha was kind of limited. Also, if you look at last 20 years, in US, a significant part of rally was driven by one or two sectors.
Okay.
So sometime it is internet, sometime it is more of technology companies. So market movement was very concentrated. So if you are running a diversified fund and you have kind of allocation mismatch, then you underperform. Similar thing happened in India.
Yeah.
From 2012-13 to 2019, the broader economy was not doing so great.
Yeah.
But couple of sectors were doing very, very well.
Yeah.
So for a diversified fund manager, it became a little challenging to outperform the index. But as broader economy picks up and grows, and the growth percolates to more number of sectors, it becomes easier. So if you look at last 1 or 2 years, there has been significant alpha in
I think most funds have beat the index fund over the last 2
active
years.
funds. The second perspective that comes in terms of evolution of a market and economy. So we right now are in a phase where in next 5-10 years, we will have more and more companies getting listed.
Yeah.
So you'll have more options to choose, and hence your ability to outperform will be much better.
Okay.
Because you have more options, so you can have a better construct of the portfolio, etc. And as it becomes much more larger, the index performance is not skewed because of some stocks.
Because the overall thing is growing.
Yeah, because it is broader.
Yeah.
Right. So the overall thing is not that narrowed down to one or two sectors, and where if you miss them, you tend to underperform.
Got it.
So I think both are good for investor perspective. Investors should choose whatever he is comfortable with.
Yeah.
But do invest.
Yeah.
The best thing about this is that it makes you invest, right? Yeah. And in the mid and small cap space, I think, and especially let's say multi cap or flexi cap, their active fund management still has good room to create alpha.
Yeah.
And
And some have in the last few years. I've seen some
Yes.
small cap and mid cap funds have done well.
Correct.
Yeah.
Because there the skewness is not very high in terms of index. It is very broad, and the weight differential of, let's say, the top guy and the middle guy and the bottom guy is not too different.
Okay.
Whereas in large cap, it is very stark. Because the difference in market cap and the free float is very, very high.
Yes.
In terms of if you look at the larger companies.
And index weightage also is a little skewed right now from what we are seeing.
Yeah, that's because of free float.
Yeah.
So let's say, for example, why financial services is a very large part of the index, because free float is very high.
Yeah.
What we say free float means total market cap minus promoters holding.
Correct.
So if you look at non-banking companies, non-financial companies, the promoter holding tends to be higher. Somebody is owning the company, right? There is an owner. Where in banks, it is not the case. Banks are more likely publicly held, board driven, etc. There are multiple investors. So everything is virtually free float.
Yeah.
So from that perspective, the skewness in mid and small caps is lower.
Understood.
So there you can reasonably have a lot more probability to create alpha.
Yeah.
So that I think is still active, is good. But again, if an investor is willing to invest even in an index fund, do invest.
Yes.
Don't get into this trouble of deciding where now
to go, what
start.
Yeah.
Let the compounding work.
Yeah.
And then over a period of time, you will get confidence to come to active funds.
Got it. Now, I also know that Groww is launching their own mutual funds as well, and that is what you're heading right now with the division. So, can you give me an idea of what you're launching and when you're launching it, and little idea on that?
We came into existence by acquisition of an existing mutual fund.
Oh, I didn't know that. Which was that?
India Bulls Mutual Fund.
Okay.
We acquired that.
Yes.
In May this year.
Okay.
We completed the transaction that was going on, regulatory approvals, etc.
Okay.
So right now we have 4 active funds in our bouquet,
Okay.
and we have 1 index fund. And then now we are launching this month a BFSI fund.
Okay.
So we are offering all the products to the customer, to the investor,
Yeah.
active funds as well as passive funds,
Passive funds, okay.
so that he can decide. As a Groww, as an organization, we believe in democratizing the financial space.
Correct.
That is what we have been doing for last 5-6 years. So we'll continue to do that even in the AMC side, and we want to give a lot of option to investor, and then he can choose, because every investor has different need.
Correct.
And he has a different objective. So every product doesn't suit everyone. You need very few set of products,
Yeah.
depending on your life cycle, where you are, and your risk appetite. So he'll offer all the products. And next 1 year, we will keep on increasing, launching new funds,
Okay.
depending on context and what we think is the better suitable at that point of time.
Okay. So I have one question. So when you said you're launching a BFSI fund, what is BFSI and what comes under BFSI? Like what type of companies do you track? How big is that universe?
Yeah. So universe is quite big. If you look at total universe, it is more than 100.
100 companies?
145 companies.
Oh my God.
With our filtering, etc., we bring it down to like 45, 50.
Okay.
And then we will create portfolio of, let's say.
So
around
what are
40.
the sectors that are there?
Yeah.
Banks are definitely there, but what
Yeah.
else is there?
So then financial services.
Okay.
So NBFCs who
Okay.
provide lending. In the lending space, you have banks, NBFCs, microfinance, small finance banks.
Correct.
All these is your financial services part, lending part. Then you have insurance. I is for insurance.
Okay.
And you have then wealth management companies.
Okay.
Because a lot of people are now creating wealth for themselves.
Yes.
They are doing something. That is why they are making money.
Yes.
Right? So they don't have enough time to manage their finances. So
Okay.
there are wealth management companies who are managing that.
Okay.
Then there are capital market participants who are
Okay. What are they?
like working like broker, custodians, demat,
Understood.
right?
Understood.
All those kind of services being provided.
Okay.
So then there are stock exchanges.
Correct.
So it's a very wide array of
AMCs also.
AMCs is also part of that. They are managing money. So any company which is either getting money from customer and managing it, or who is lending to others.
You told me that you have around 140, 150 companies
Yeah.
universe, and you have broken it down.
Yeah.
So every AMC usually has their own funda,
Yes.
right? What is your philosophy of investing or shortlisting companies?
Okay. So we don't have a very particular fixed theory. Like some people work on growth, some people work on value, etc.
Yeah.
We are neither growth, we are not value, we are everything.
Okay.
So we believe that we should be able to create wealth for investor with good amount of risk management.
Okay.
So that is what we believe. What is investing? If you break it down to smaller parts, so you identify a business which is growing, which is run by capable, competent people who have good corporate governance so that you can trust them, and you buy it at a reasonable price.
Correct.
Right? Or if there is a mispricing in any stock, you think it is worth 100, it is trading at 60, 70, 80, whatever. Right? So you buy it at some point of time, valuation gap breezes down and you make money out of it. So this is what people call as value, and then other part is growth. So we do this most simple thing.
Understood.
So we have broken down the whole process into 4 parts, which is people, potential, pricing, and positioning. People is basically the management part.
Yes.
So their integrity, governance, and capability.
Correct.
Competence. Because eventually to drive growth, you need capability.
100%.
Then comes the potential part,
Okay.
which is basically about the business.
How big?
Yeah.
Okay.
Where is the potential? How big is the potential? And if the potential is there, whether the company is financially sound to capture that potential or not. So we look at the industry size, what is the TAM,
Understood.
how ROE cash flows are panning out for the company.
Okay.
So that is on the potential part. Then we go to the pricing, which is basically the valuation. What is the valuation? Is there opportunity to make money over there or not? If everything is kind of being reflected in the stock price, then how you make money, even if it is a good business, very good management, right? So we ask this question to ourselves. And the fourth is positioning, how we are sizing up the stocks in our portfolio,
Correct.
how we are optimizing
The weightage.
the weightages.
Okay.
Yeah, because that is very important. So that you always have a situation where the good stocks have reasonably positioned,
Yeah.
where the return potential is good. Now, we have to look at risk management. As an institutional money manager, what we bring to the table for a retail investor? One is ability to identify opportunity, assess them well. And then second is manage that risk. so that if things go wrong, how you will prevent the drawdowns.
Understood.
Right? That is our job. That is we offer to the retail investor.
Yeah.
So we manage risk at all these 4 pillars.
What are drawdowns? Just so that people can
Drawdowns means negative return.
negative return. So how low can it go?
Yeah. So if you make a wrong decision, you will have negative returns.
Correct.
Right? If you go wrong.
Yeah.
So if you assess a business wrong, someday it will fail.
Yeah.
And you will
So
create
you limit
negative
the drawdowns with good risk management.
Correct.
Okay.
So with our capability, with larger teams, etc., with our experience, because most of the investors are not doing full-time investing. Right? They are doing their own job.
Correct.
So they are managing their savings.
Correct.
So they will not have enough time
Yeah.
to get into a detailed research process.
Understood.
And then there are so many companies, so many different sectors.
Yeah.
So you cannot build expertise on each of them. Right?
Correct.
Very few people can do that.
Yeah.
Whereas we have a team where there are career analysts, right, who are tracking the same set of companies
Wow.
for 5-7 years.
Yeah.
So we get benefit of their expertise. Then there are fund managers who are working in this industry for 15-20 years.
Yeah.
So they have an expertise. So we bring that expertise to the table for a retail investor
Understood.
so that we can assess companies better.
Okay.
Assessing companies better is not just for buying it right. It also is for how long you can own it.
Yeah.
Sometimes people just sell because it has gone up by 50%.
Correct.
Right?
Correct.
There is a potential it can go up even 100% or 200%.
Okay.
So with understanding, we can do that job slightly better than a retail investor.
Wow.
The second part is risk management.
Yeah.
How you manage the risk. Right? How much concentration you need in the portfolio. How much should be the sizing. Where are the risk lying.
Yeah.
So with all these 4 pillars, we manage the risk also. The risk can come from the management, their quality, their integrity.
Yeah.
The risk can come from the business.
Yeah.
Some businesses can get disrupted very fast. You may not, normal person may not understand it. And what is the potential?
Yeah.
Where is the real potential lies? Capability of the company. Then the valuation. It's a big risk. Right?
Yeah.
So with our experience, we are more attuned to value companies rightly.
This I actually wanted to ask, and I'll also make this the final questions. So it's always we always look at mutual funds as mutual funds, right? We look at your NAV, you look at your KGAR, past return, what is the possibility, and what is your portfolio. But I want to know what goes behind that, what is inside the brain of a fund manager, right, or person who heads the equity. So how does your day-to-day life, because you said you have 140 stocks, and then you will narrow it down to 50.
Yeah.
You might not invest in all, you might track it as well. So how does, what goes behind the scenes is what I would like to know.
Okay, so we have pretty mundane life.
Okay.
Generally, so there are 2 levels that our teams have. So there are analysts and there are fund managers.
Okay.
So as an analyst, your job is to track a particular sector or companies and multiple. There are senior analysts who will tracking 2 or 3 sectors. And then as a fund manager, you make the investment decision in consultation with the research team. So they do the job, you discuss with them deliberately. So generally how our day goes like is that in the morning we start with generally an update and morning meeting where we all sit together and discuss what has happened in last 24 hours.
Wow.
And we do it like every day. So that happens. And it happens across industry. Timing may change. Somebody will do it in morning, somebody late morning, but everybody will do it. Then we get into our work, we go through the reading, etc. We look at our portfolios and then think what need to be done today, which new stocks need to be added, etc. Then almost on a daily basis, you will discuss 1 or 2 companies that whether we should own it or if we should increase the weight or reduce the weight.
Okay.
That kind of things will go on. And then you will meet companies. You go on meeting expert, etc. to understand their business. Because everybody has a very different business model.
Yeah.
So you need to sit with them, understand with them what exactly the business model, where the capability lies. So for example, 2 banks may not be the same. One might focus on retail banking. Even in retail banking, they may be expert in some areas.
Yeah.
Another bank may focus on corporate banking. In corporate, there are multiple layers. Smaller corporates, bigger corporates. Some people will do project financing. Some people will do only working capital finance. So these are the basically nitty-gritty you have to understand.
Yeah.
Because that is how you built up the projections and models for the companies.
Got it.
Then we keep on discussing internally. Generally, internal discussions happen a lot. And that's it.
So almost every day you're very active.
yeah. Except watching the screen, we do a lot more other things.
Oh my God. So, wow, Anupam, thanks a lot for giving us this massive knowledge. I think you guys can also agree that we've learned a lot today about the BFSI industry. First, we understood about the Indian market. Then we understood what is BFSI sector and why is it growing so much. We then went on to the mutual fund part where we spoke about the AUM and the size and the future of mutual funds. And finally, we broke down Grow's mutual fund that is coming up, and the funds that you already have, and your day-to-day activity and your life in that, right? So guys, today we got a massive amount of knowledge from Anupam. So I want you guys to comment and tell me what you learned from this today and what you would like to know as well, because I will answer those in the comment section. And I want a big thank you from all of you for Anupam. But we won't let Anupam sir go without one last question that we do always. What is that one advice that you would give all the audience? Just a quick, small advice that you would give all the audience for today's market.
So be disciplined and keep on investing. Let the compounding work on its own.
Yeah, don't get restless.
Yeah.
Perfect. So guys, so Anupam, thanks a lot
Thank you.
for coming here and giving your time. I know I loved it, and I know my audience will also appreciate this as well. So really thank you, and all the best for the Grow, NFO and the other mutual funds that are there. I know your life is very hard, but I keep on it, and this is great.
Thank you,
Yeah?
Shashank.
Thanks
My
a lot.
pleasure. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully. म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।